Let's put all this and other news into perspective with Gaurang Shah, who joins us this morning. Mr. Shah, good morning, and thank you so much for your time. And I just want to first off start off with the sentiment or the sort of emotion which is visible in the US. Concerns of stagflation, an environment of high inflation, low growth. What does this mean not just for US stocks but for investors across the world?
Well, thank you so much, Kartik, for having me on the show. Good morning to all your viewers and to you and your entire team. So I think inconsistency and contradiction that comes out from US White House is the biggest cause of concern. And we very often heard President Trump use the term fake news. I think you should get your house in place, given the kind of contradictory and confusing statement that comes out from different representatives of Trump administration. Having said that, I think the markets are, according to me, Karthik, I think the markets, not only in our markets but world over, should stabilize. I think stability is the thing that we should need, the hour or the need of the hour.
Okay.
But the problem is the news flows, Karthik, and the development situation by the hour in the Middle East.
Right.
Every time we get some advisory kind of a statement, or the escalation is moved to a higher level, the markets again gets nervous and we have a correction.
Right.
So this choppiness and volatility is going to continue. But I think these are the markets which gives opportunity to long-term investors.
Right.
US has its own problem. They should get their house in place. But for our markets, I think other than this geopolitical situation, we don't have to worry. Our domestic data points have been positive.
Yeah.
Short to medium term, because of rising crude oil prices, there might be a little bit of bump up in the inflation. That also we need to watch. But overall, I think these are the markets which give opportunity for long-term investors.
All right. I want to pick up on two things you mentioned, Gaurang. First, of course, is the choppiness and the correction, and we are seeing that on the screen as you spoke. In fact, Sensex and Nifty have corrected and have slipped into the red territory. But I think more importantly, the concerns about inflation. Now, is our understanding correct that inflation will creep into the Indian economy only if the petrol pump prices change, and the government right now is pretty clear that any change, any disruption will not be passed on to the consumer as far as at least retail prices of petrol and diesel go?
So somebody will have to bear it, right, Karthik?
Right.
Because the fact of the matter is, from $65 or $70 a barrel, Brent has moved up
about
to
85, yeah.
And then it has come down. So somebody has to pay a price for it. So if it's not going to be you and me,
yeah,
the government will have to step in and, do some kind of calculations to incentivize or cushion the negative impact for the oil marketing companies.
Right. So it's a balancing act of the government trying to manage current account deficit, which is likely to balloon. And then if the prices are not passed on, then the sort of double-edged sword of current account and fiscal deficit creep in.
Exactly. That's what I was trying to get in, Karthik. Right. So I think we need to wait and watch. But let me say this, Karthik.
Yeah.
Crude oil prices have jumped to $110, $115, and again they have come back. And according to my knowledge, my understanding, and my calculation, if crude oil stays above $90 a barrel on Brent and maybe $85 a barrel on Brent for a prolonged period of time, that is 3 months, 6 months and beyond, then the seriousness of negativity starts affecting the twin account, as well as the inflation, as well as interest rate calculation, etc. Again, GDP and slowdown, etc.
Right.
If the crude oil prices fluctuate like this for 2-3 days, it does not have any durable long-term impact.
That's right.
Because we have a long-term contract.
Absolutely.
So we need to understand this arithmetic and calculation.
Right. Okay, fair enough. I also want to understand, why is it that India is lagging behind when it comes to the reaction of other Asian peers to all the developments in West Asia? So look at Asian markets. I think last two sessions they've continued to rise in a far higher degree than the kind of flatness or the gap up that we've seen in the Indian market. What is working in favor of, let's say, Japan and South Korea right now, where India tends to lose out? Is it just the dependence on oil passing through the Strait of Hormuz, or is there more to the story?
No, and more to it is the dependency of oil, because we almost 75-80% we are dependent, Karthik, on our imports.
Yeah.
Crude oil, CNG, LPG, etc. That's not the case with the countries that you mentioned, like Japan, etc.
Right.
The second problem is our good FI friends have been relentless sellers. and some part of that selling which has happened in India goes into some of the other Asia Pacific countries like Japan, like Korea, like China, maybe some other country, Indonesia, Malaysia, etc., etc., etc. And the pain point of this FI flows, according to me, I don't know if I'm right or wrong in this, Kartik, is because of the uncertainty that lies between India and US as far as the trade agreement is concerned. And of course, the flip flop that has been happening. But what I'm trying to say is that despite of FI selling, despite of all this, last year we managed to make a new all-time high on Sensex and Nifty, and then we have retraced or pulled back close to about 10%. Correct me if I'm wrong, Kartik. So I think this correction is a great opportunity for investors to nibble into stocks. I'm not saying go and put all your money at one time, but start nibbling.
Stop nibbling. And and that is in fact, the correction that is also visible on the Nifty 50 heat map this morning. A lot of sectors offering potentially that buying opportunity when you look at stocks of consumer durables like Maruti Suzuki, M&M, even Bharti Airtel. All these stocks seem to be under some pressure this morning. But I really want to come to stocks in news this morning, and a lot of action there, Gaurang. So, we'll start with your disclaimer, but I want to first talk about Reliance Industries, which the US president is claiming is likely to invest in that $300 billion US refinery in Texas. Now, we are yet to sort of hear directly from Reliance Industries on what that quantum of investment will be. But markets and in fact investors not as bullish on this latest investment as one should have expected, because Reliance stock is up just about 0.8% or so this morning. What do you make of the statement coming from the US president?
So, firstly, a standard disclosure, which I forgot to give.
No, I'm coming to the stocks now, so I reminded you.
All recommendations are a part of our fundamental research team recommendations from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest. But we share advice, similar investment ideas with our clients. They might have their investment over there. And thank you, Kartik, for reminding me. Otherwise, I would have been pulled up by my compliance team. On Reliance Industries, we've been maintaining a positive stance.
Right.
Unfortunately, some part of the business or large part of the business of Reliance is exploration, oil, gas exploration and marketing as well, because Reliance into both the part of the world. And because of this fluctuation, etc., we've seen a little bit pressure. But the news of Texas refinery, one of the things, Kartik, we have to understand is that the refining technology in Jamnagar that Reliance has is of the highest level. They can refine cheapest of crude, which has got high density and sulfur content. And that's why the margins and etc. are the way they have been reporting.
Okay.
And I think the problem with US is also because a lot of oil that is found in US is of high density and high sulfur content. I think possibly this is one of the reasons why Reliance has been picked up by the US Trump administration for this refinery in Texas. Knee-jerk reaction, because these are initial statements, like you rightly mentioned. Company Reliance has not come out with any kind of statement. It is President Trump who has the habit of making forward-looking statements.
Absolutely. Okay, you are talking about the complexity, and there's something I picked up called the Nelson Complexity Index, and reportedly Reliance, the Jamnagar refinery of Reliance operates at this Nelson Complexity Index of more than 20, and some experts, at least on social media, are pointing out that perhaps that complexity is needed to process and refine the Venezuelan oil. Is there any merit in that argument or that hypothesis?
No, there is a little bit of merit, but Venezuela oil and that theory I am not too aware about.
Okay.
So I would not go into that.
All right, fair enough. Let's move on now. Peter Elbers has resigned, and his resignation as CEO of IndiGo comes 3 months after the FDTL rules were pretty much violated and the airline suffered major consequences, flight cancellations, disruptions. I think we all remember what happened in the first week of December. But again, the stock is reacting quite favorably to this development of Peter Elbers resigning. In fact, IndiGo stock is up about 2.8% in trade. This despite higher ATF costs, disruptions in West Asia and overall flight routes impacted. What do you make of this development?
I wonder what took 3 months for Peter Elbers to resign, Kartik.
DGC investigations, perhaps?
He should have taken the moral responsibility. Why wait for investigation?
Okay.
I mean, take it as a moral responsibility. You were at the helm of all this confusion, chaos, and the pain and the suffering that passengers of all age group had to suffer. 3 months is a little bit more time for you to react and take responsibility. Come on. I mean, you put a black mark not only on yourself, but you put the entire aviation sector and the credibility of Interglobe Aviation in a spot and in a fix. You
Okay.
should have owned up a long time back. Having said that, we've been positive on Interglobe for many, many years. We continue to remain positive, and I hope that the management is able to replace Elbers with some other gentleman who has got wisdom and fine sense of judgment in terms of taking the business to the next level.
All right. But this sort of change of guard at the topmost position, the corner office of IndiGo, not rattling investors about continuity issues at all. The stock is up about 3%. So is it corporate governance, and is it the fact that that Elbers is out that investors are rejoicing? Or do you think in general the sentiment is a little positive with the opening up of some routes in West Asia?
No, I think it is because of Elbers going.
Okay.
Point number one. Point number two, aviation sector is vulnerable to two parts. Airspace being closed, and the second is aviation turbine fuel prices going up.
All right.
The second part, aviation turbine fuel ATF prices going up, gets passed on to the consumers unless and until the Ministry of Aviation steps in case if there is a large escalation in ticket prices. And of course, known fact is that Interglobe happens to be one of the largest carriers in India, has got the largest fleet in terms of aircrafts. And I think airports opening up, new airports, Jewar in North India will open up more connectivity. Last year we had Navi Mumbai airport opening up, Kartik. That also happened to be a great opportunity. And likewise, I think if you have regional connectivity improving and new airports coming up, then I think Interglobe is in the advanced stage to take advantage of that particular situation. And of course, stability with geopolitical news also plays a very vital role in soothing sentiments for the aviation sector stocks.
Right. Okay. And finally, I also want to talk to you about Inden, the gas brand of Indian Oil, because LPG shortage is continuing to mar hotels, restaurants, small businesses across the country. Reports coming from all parts of India about shortage and potentially shutdown of businesses, small businesses. What does this really mean for Indian Oil? What does it mean for oil marketing companies in general? Because HPCL, BPCL also, one would note that there is no, in fact, the government has said that the retail price of petrol, diesel is not going to increase. But like you mentioned, with elevated crude prices, margins are likely to remain squeezed.
Priority sectors need to be given priority, Kartik. Consumers, as well as certain sectors which are very, very crucial and important for the ball to roll, needs to be given priority in this kind of situation. And more importantly, I think three ministers have gone on record. Honorable Mr. Puri, Honorable Finance Minister, and Honorable Union Minister Mr. Piyush Goyal. And there have been number of meetings that have been held with the center being the Prime Minister and other crucial ministers with respect to the securing the energy requirement for our country. And I was reading a report, 40 plus countries have been tapped by Indian government to ensure continuity of crude oil as well as CNG, LPG. Short-term price, if any one particular sector like hotels, if they have to pay a small price, you need to pay for it, right? Because you need priority sectors to continue and you need consumers to be the top priority. So I don't think anybody needs to complain on this.
All right. Well, let's leave it at that this morning. Gaurang Shah, as always, pleasure speaking to you this morning.